Thursday, December 18th, market analysis, Stan Ehrlich. I always start out with stock market indexes, go to futures, and I got a few stocks I'm following. I will not be recording next week, Christmas week, similar to Thanksgiving week, but I'll be back the weekend after Christmas. I do want to say that the Santa Claus rally, buying 1/3 of your position, we use the S&P 3 days before Christmas, 1/3 of the position 2 days before Christmas, trading days before Christmas. This year, that's Monday, Tuesday, Wednesday next week. And 1 day before Christmas, it'll be Wednesday next week for your total 100% position for the Santa Claus rally technique. And it will be approximately 7 o'clock in the morning, California time, or half an hour after the stock market opening. That's when you, historically, it shows, should be buying. I'll tell you the offset time of day for the first trading day, second trading day, and third trading day of January, when you offset 1/3, 2/3, and well, 1/3, 1/3, 1/3 on those 3 days to get out. Or we'll see about this. Use a very tight trailing stop underneath the appropriate price, whatever that's going to be, instead of just getting out, because there could very well be more upside follow through than the old fashioned Santa Claus rules. That's what I like to do. I like to give it a little more chance. One of my techniques is a smart trailing stop. So S&P 500, E-mini, climbed a bit today, 5 points or so. Fairly firm. Did not have a bullish engulfing, although it did get a little bit lower than yesterday's very sharp big break low. I don't have any reason for it to bottom out here, but it's done it already a bit. The high today is generally not above yesterday's high. Maybe there's one exception. I have no bullish engulfings. I have no bullish signals. I have nothing but a couple of the indexes getting a bit oversold. As I said yesterday, time for possibly a bounce. Well, here it is right away. I don't want any more strength. I don't want to close above, for example, yesterday's high on a close. I can accept a very modest amount higher than today's high, but I don't want it to stay there. And that goes for most of the indexes in a general sense. Here is the 5-minute chart today instead of the 15 like I had yesterday, giving you an example of how much down we have come from the high and the high close, which is at the end of the day on the 11th of December. Broken quite a few lows here, quite a few days with the lows. Generally, at least 2 to sometimes 3 weeks worth of lows for the indexes on a closing basis, which was yesterday. So again, I can't get excited about this bounce. I don't think the market's bottoming out. It's probably already rallied up most of what it's going to. I don't expect any significant upside follow through. I'm looking for new lows very soon. I'll give it less than a week. Spiders, the same commentary. Some resistance in general, a little sloppy, just a little bit above today's high, which is above yesterday's high. The low is nowhere near. The close was up firmly, quite, fairly strong. But remember, it's only halfway in the middle of yesterday's range for today's close. So close to close, Next, spider, 5-minute. You can see how much we've come down here in the last few days. And I want to go back. This is close to a double top. This is very, very close to exactly a double top in a spider. And that's exactly what we've got. Now, if that's true, then we have a downside breakout at 651.5, let's call it. And it's going to be the low of this day, and that's 650.80. Call it 651. If that happens, then you've got a downside objective of approximately 613 forward. This, I think I'm probably going to put an arch mark over as a shoulder, the head, and the first shoulder we got with a bearish engulfing ER sell signal. That was a very, very profitable day trade. The neckline slants downward. The first shoulder high was on October 10th, 11th, December. It's about a 2-month formation, almost exactly. Last shoulder was 1210 for its shoulder high. Or you could round out these 4 days because they're so close to the price. Doesn't really matter. At resistance and trying to close an old gap. Not quite completely, almost always. But so down, new low, approaching support yesterday, got oversold. Barely, not much, but it did on the QQQ. Remember, this is a custom RSI, and I use 75.25 for the thresholds, not like Wells Wilder did with a 3070 and a 14-day look back and a close only RSI chart. Not telling you how high it got for the highest high during the day, like mine does, and vice versa on the bottoms. I really am not all that concerned about the close. I'm concerned about how high it got at any particular point during the day. That's why my RSI subgraph chart looks like a vertical bar chart, which is not. Excuse me, a high-low close chart, but it's not. How high did it get during the day? Up there. How low did it get during the day? Down there. And where did the RSI close? Well, that's similar to Wells's, but I don't even connect the dots. I wouldn't even have to plot the closing. I really only want the highs and lows. All right, so enough said. Doji, very strong, firm close, but it's still the second lowest close for the trend down. 15-minute chart. Basically, the triple Qs just went sideways today, sort of in a pennant all day. MNQ, Doji, but it got oversold yesterday, and the low today did get into oversold territory also, but still, don't trust it, don't like it, don't think there's going to be much of a rally all across the indexes in general. Here's the 5-minute chart in an MQ. Now we have a bearish, almost a bearish engulfing in the YM, excuse me, but it did close a little higher. It did have a lower low, but it didn't quite make a higher high than yesterday. So what have we got? Hardly any rally whatsoever, a lower low, closing relatively close to the low of the day. There's no recovery here. The YM could start to drop faster, quicker than the other indexes. Here it is late in the day. Russell, almost like the YM, Dow, and that's is not coming back very well. Got overbought, almost had a bearish engulfing, but not quite at the top. But I said so at the time that it looks super close and probably a sell signal. I probably mentioned those words exactly. So it's doing fine. I am looking for a move all the way down to 23.22 or more. Remember, objectives on the various head and shoulder patterns are always minimum upside or downside objectives. And I'll show you a couple of examples of it being surpassed, and the grains in particular, in a minute. Bonds touch the neckline from below. That's totally allowable. Would have been a good short sale right around that price level. Maybe you missed by a few ticks. Maybe you got the high or super close. Closed with a small profit, but it was closing higher. I'm looking for new lows very soon, and the downside objective here is 112.10. Now, we haven't gotten the same response out of this head and shoulder and notes. We ended up getting a buy signal just under the neckline. I didn't like it. I didn't think it was going to work, but it has been working. So now we have a day where all of the price range, even the low, is above the previous neckline. That pretty much kills this pattern. So I'm going to stop talking about the notes having a head and shoulder top and talk about a trading range, bullish engulfing at the bottom of the break. So-so rally so far. Wouldn't expect it to rally up much, at the very most 13, 18, or maybe middle 13s. Next, crude. Got oversold, bouncing a little, no big deal, looking for new lows. And maybe very well down to 51.50. Next, we have an outside down day, bearish engulfing, but it wasn't overbought, so it's not your typical sell signal. It's a normal Japanese candlestick sell signal, not an extra bearish one like that, my bearish, because it also got oversold within the allotted back days, or that one, for example. Anyway, looking for lower levels, looking for lows to be broken, looking for a test of approximately 3.5, and that's not that far away, probably even lower than that for natural gas. Next, a little bit of a bounce, poor close, a little lower, heating oil, looking for support to get broken, that it was tested just in the last 2 days in oversold conditions. My downside objective is 1.9. This head and shoulder top is working great. Breakout on 12.9, tested neckline next 2 days, never closing above it, just squeaking above it a little bit. Boom, down, 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 down. Bounced for the first time yesterday and down again today. Almost new lows again. Again, support starts at 2.03, but the downside objective at a minimum is supposed to be 1.9. Next, double top potential in gold, overbought conditions, and fairly significant, 83 at today's high. Poor close down a little bit at the moment. Almost a reversal, not quite. I never like it when we see higher highs for the trend and you're overbought and the close is poor, around unchanged or lower, particularly lower than the previous rally highs. That's exactly what this did. This could be a starting day on the downside. Next, silver. Not quite the same. Doji just started to slip, overbought. Sorry about my cough. But could be a starting point, and that's what I'm looking for. A little divergence. We have a higher high in price, but not in the indicator. Platinum, just getting out of hand. 88.5 RSI high, super overbought, new high close. Be very careful here. Boy, I'd be looking very strongly at some puts if they got them. I don't know if the puts in platinum. But this is an ideal situation for the market to top out any day and have a sharp break. Next, high-grade copper, sideways. We still have a bearish engulfing sell signal on the high day, 12.12. Exactly. It just hasn't proven itself yet. I need to close below 5.27 in order to be on the way down more, which is exactly what I think it's about to do. Next, head and shoulder top is working, did work, and has worked great. 2 days ago, it reached the downside objective almost exactly at the low of the day. Dropped off a bit more yesterday, still oversold for several days in a row, and oversold again, getting very, very oversold at a 14. I'm not sure why I've got the volume in here. Let's cancel that. So the oversold level at 13, 14 area, watch out. This is about to turn back up. We've already succeeded in reaching the levels we talked about for weeks. And now it's time to have gotten out a couple of days ago already, missing a little bit of the last part of the move, but watching for buy signals for sure. Next, new low close, almost a new low, but oversold in soybean oil. This head and shoulder, this double top so far has done very nicely. Minimum downside objective not reached yet at 46.90, but we've come very close. Yesterday's low was 47.78. About 3/4 of the minimum downside objective in the first place. So a little bounce today, but didn't hold, closed lower, liking what I see, looking for the objective. Next, another new low close in soybean meal. Now this head and shoulder top did work past tense and finally reached its objective on October 10th. December 10th. Had a bullish engulfing, didn't work very well, just for a day or two with a very small profit potential. More likely than not, you scratched or maybe even lost a little. But we've now got lower lows, looking for lower levels, oversold, watch out. A little divergence on the bottom possibly as well. Could be bottoming out right away for a small rally. Still bearish. Next, corn did jump back up above what I thought might be good resistance yesterday at that old bear trend line. But now we've got more of a sideways trading range developing that I would like. Yesterday started it. The reason is this is a head and shoulder top with a very extended right-hand shoulder. Really, normally it doesn't wait this long in order to go down to the neckline and start to break out to the downside. I got to keep moving my measuring stick for the downside objective to the right as this thing delays. I'm pretty close to saying this is really not a head and shoulder top anymore. If it goes sideways, say another week, yeah, that's not good. Higher, definitely not good. Starts to go down immediately, well, it would have saved the formation. Next, wheat. New lows, maybe a double bottom here. This is almost the same levels it got to in October 14th, 2 months ago. Just a little bit lower. Also oversold like October's lows. So I wouldn't be surprised to see, I hope, a bullish buy signal, green ER buy signal. The range today is fairly small. So if we dropped off a little tomorrow and then started to come back pretty quickly, nicely, could have an outside up day. But I think we're trying to bottom out here. Next, we've got Apple. Sharp break, steady close. All I can say, it got oversold momentarily, just a little bit. At the low of the day, though. Still looking for lower levels. There are gaps to close I've talked about for weeks. Next, Doji, higher close, Tesla, no big deal. Still think this overbought condition is going to develop to a top. My fail safe is I'm wrong if it starts trading above 495 and a third. Next, NVIDIA. New low close yesterday for quite a while. New low close, at least, for quite a while. And a few weeks for the lowest low. Bouncing back today with a doji, it looks like. No big deal. Still looking for lower levels. Supports to be tested. Probably at least down to 153. Next, AMD. Oversold yesterday and a doji today. A little bit of a bounce out of a support area. No shock. Expecting lower levels. There's that big gap to close. Down to 171 and a few pennies. Next. This could be a broad double top, and the MES, as I've talked about before, not the head and shoulder. But this is it. Thank you very much. You have a great day and profitable trading. My last day for a week will be tomorrow. Later, profitable trading to you.